Hope you're doing well. I had a week off last week. I was in and out every day, just doing the risk calc. But I was watching things, and I was watching the cross yen quite a bit, and I was watching gold as well. Now the thing is with cross yen, we were a buy at the big picture, and now they happen to add short, and by doing so, we saw price propel higher. So it already was a buy, and they had to sell it, and so this is the QDB entry where we have to draw a box. We've got a punishment box because they sold it, so that's going to be a support, right? So let's draw a box. This is just an example of cross yen. This is pound yen. We know the pound's quite strong. It's doing quite well against USD. Yeah, that's fine. So we can just map this. We know this is going to be a decent support because they sold it. So that's the logic, okay? So you're looking for longs, above there. So you could have looked for the retest potentially, and it would have been a nice trade. Very, very nice trade, in fact. But your stop would have been quite wide. So you're looking probably about a 2R there. So just to say, if you subscribe to the QDB service, you do need to check your sentiment on the spreadsheet before you enter, because you might have looked at things and think, oh, this looks like a sell or this looks like a buy, but you really kind of want to know what the sentiment's like saying, really. So we could have come to the bubbles, and we know that they're heard a long yen, but they've added long yen, right? So it's a sell, right? If they're already buying and then they're adding to their buys, it's going to be contrarian sell for us, okay? And they're short Kiwi and they're short pound, so we could see pound strong, yen weak, right? So we just have to come back to the GJ, and up we go. And there was something I just made on Excel. It's a basically just examining the range and the distance from the high and the distance from the low. And you see the Swiss yen, it rallied 400 pips off the low. Pound yen, 469 pips, right? So this is what you've got to be really careful about if you're entering a trade, and you want to be checking your sentiment, because if you don't check the sentiment, you could incur losses, at least by checking the spreadsheet, seeing where the bubble is, and then if you decide to trade against it, then at least you're aware that you're going with the herd, right? Now the thing is, sometimes they can get paid, but most of the time, 80% of the time, they won't. They'll get punished. Okay, so in this case scenario, there were long yen, and they got absolutely destroyed. Okay, so just a quick one there. So just to come to your spreadsheet, it's a very reasonable cost. You can join for $30 a month, and you get the access to the sheet. And that $30 would have saved you money had you have not caught this particular trade. You might have looking to sell. You might have been looking to sell, and this is certainly more than $30, right? That could have made a lot more money, and you would have not incurred a big loss, or a medium-sized loss or a small loss. But so you could have avoided that damage to your account, but just by simply checking the spreadsheet. Okay, so it's a quick one there. Let's look at the S&P. In fact, I'll double click that so we can maximize it. So yeah, I mean, they'd sold it here, so we can create a box, and we saw a dip into that box. Can you see? I'll show you. And well, I'll be back tomorrow for the COT data video. You can see how we had that dip into the demand. They sold it, and up we come. It's just really just to test that box, and up we come. So that's the S&P. Now, however, they have gone long, or should I say less shorts, and we have come up to a important resistance there. So that's going to be very interesting right now. So that we'll have to map a box on Monday time, 8 o'clock Monday morning, might be 9 o'clock, I'm not sure, and then we'll be able to create a box around here, and it will be a punishment zone, but be a resistance because they've gone long, right? So this should be a good resistance, but we'll have to wait and see what happens on Monday. Hopefully you understand the logic there, and then see how we had to test that box. They sold it, so we come up. It's dead simple. And then of course your stop loss would be a candle prior, something like this, maybe that there, the swing low. So that would have been a nice trade, very nice trade in fact. So you're looking to where you're going to place your stop before you enter, and then as long as you know where your stop is, then you know you can look to profit. But what you want to do is mitigate your risk. That's the most important thing about trading, is that you want to, you know, lessen the damage to your account. So if you know where your stop is, and then if you get stopped out, it doesn't really matter. What you do need to do is know where your stop is, because if you don't have it there and it did fall, you might think, oh, I'll put it here, and then that might break, and you're like, oh, where do I put it now? And you think, oh, then you get to like a desperation, and you think, oh, it might turn around, and it might not. So at least you've got that, you know, emergency brake. Really important. So let's look at US 30, and what we'll probably do like a brief bulletin, I think, each day, because I don't think we need to be looking at every single thing, because it's quite a heavy document that goes out every day. We might be able to like reduce that volume a little bit going forward. It takes like an hour and a half to do every day, and I'm not sure everyone actually looks at the bulletin, so I might just reduce the volume a little bit. And well, we can see how they'd sold it here, so we can create a box, and you get the idea anyway, don't you? Here's the box, and we had to dip into it like S&P did. Up we come, and of course we'll be able to create a box up here, and then we'll look at DAX, and then that'll be it. And we'll be back tomorrow for the got data. So very choppy, very horrible. 21% is quite extreme. God, that's horrible, isn't it? That's just really gross. Yeah, I don't even want to map a zone on that. Well, they sold it here. We're just horrible. It's because we're so extreme. Note that we've got this zone here, so it's possibly going to hold. We can elongate that perhaps. It's just horribly choppy. That's horrendous. I'm not even bothering drawing any boxes there. It's just horrendous. So this might come into play again. Hopefully the volume is okay and the microphone sounds fine, and the screen is okay because I'm using a different monitor now. So you can see how we, you know, came into that demand box. And the reason for this is because they went long, and then, you know, where the resistance, and then it became a turncoat support, then turned into resistance, and then obviously it became a nice support. There's multiple respects of it actually. 3, 4, 5, 6, 7, 8 from that. So this is an important zone, as you can see. And so that's it, I guess. Maybe we can look at the Euro USD. Lots of people are being quite bearish on it on Twitter. We are a buy at the big picture, and they went long, so therefore we can create a box here. So this is a resistance box, and that's it. So I'll be back tomorrow, and I think what we might do is do like a brief bulletin each day. I'm not sure if I want to spend an hour and a half on that each day, and I don't know if anyone's actually looks at the document. So it's a lot of time spent if no one's actually looking at the document. It might be too much information, so we can simply reduce the information, and we'll have like a, you know, more brief update on what's going on. So this is currently a resistance on the Euro USD. Hopefully everything sounded fine and it looked okay, and I guess I'll speak to you guys tomorrow for the COT data. I'll try and get it done in the morning, but we'll see how we go.